Nvidia reports results tomorrow after the closing bell. Joining us right now with more on what we can expect from the chip maker, the potential impact on tech stocks, what Wall Street is expecting, is Wang. He is Constellation Research principal analyst and founder. And Ray, really good to have you in studio with us. What is Wall Street looking for? What does Nvidia have to deliver?
Well, at the moment, they're priced for perfection. And so everybody's waiting to see, will the Blackwell chips be delivered on time? Will they not? What's going to happen going forward? And it's all focused on the forecast. When we do market checks, we see that the earnings are going to be pretty good because almost every tech company has been actually investing in data center chips and in the AI chips. And on the other hand, every company budget, when we talk to our 1,000 CXOs on the market, everyone robs cybersecurity budgets to pay for AI.
This is the point I wanted to get to. We're going to talk more about Nvidia in just a second, but that came as a shock to me, this idea of robbing Peter to pay Paul when you're taking money out of cybersecurity and putting it into AI. Is this going to be a mistake that they all look back on later if there's a huge cybersecurity attack or something that gets through?
Well, the big thing that's happening in cybersecurity is about post-breach resiliency. You know you're going to be breached. Are you better at actually recovering? And so they're making the guess that AI might get them faster to cybersecurity as well. So
okay.
Both are happening.
So it's not necessarily robbing Peter to pay Paul. This is a situation where you're beefing up AI in order to try and help your cybersecurity situation?
Exactly.
Okay, that's less scary to me. That makes more sense. If we are already priced to perfection, but your channel checks are telling you that things are going to be really great, you anticipate the stocks are going to go up? Will it be enough of a boost to actually impress the street?
Well, it may impress the street, but it's not going to bring anyone else with it because what's happening here is unlike the internet. Right? With the internet, it was open, it was decentralized. There are lots of players. Things were coming down in price. Here, it's the complete opposite. Nvidia's done a good job. It's centralized. It's closed. It's more expensive. There's only a few players that are going to win, and that's why the stock will do well.
You own 5 of the big Magnificent 7, right? Which ones are they?
6, actually. I have a couple other ones as well.
So Apple, Microsoft, Google, Nvidia, Amazon.
Tesla.
Oh, you own Tesla, too?
Yes.
Okay, so that's the one that was missing from this list. Which one do you not own?
I think I've Meta as well, actually.
Are you Meta? So you own all of them?
I own all 7. I do own 7.
And you believe that this is the right thesis to keep carrying the market at this point?
We do for now, and especially with interest rates coming down, that's actually going to help as well. A lot of people think it's going to go to EMs when interest rates come down, but actually it's not going to look that way. Aside from India, it really looks like big tech is your flight to safety and your flight to growth. It's kind of like buying GE back in the 80s.
We had a guest earlier who was talking about the separation from China, looking at places like India as a place to invest instead for many of these American companies. Does that impact any of the big 7, the Magnificent 7?
No, not as much. And what's interesting about India is it's actually a market that's growing. The population dynamics are in their favor. China has the inverse population dynamics that makes them look like Japan in 20 years.
Really? So what could be upsetting to any of these stocks? What would make you sell any of the Mag 7?
I think when it comes down, when forecasts are no longer growing, if they're losing market share in terms of adding products, they can't add services, they can't add experiences on top of it, they're not seeing that linear growth on the monetization. Because in digital, you grow by ads, search, goods, services, and memberships. And if you don't get into all 6 of those, you'll actually end up dying. And you notice everybody that was good in ads started getting into memberships. Everyone was good in memberships, started actually putting out products. And that's the progression of digital giants.
Lower rates, lower interest rates is good for technology companies unless it's coming with a recession, a big recession that would hurt corporate spending. How do you kind of play this? What's the sweet spot?
What people aren't realizing is the number of job layoffs going on in the Valley. And these are real, and it's actually AI replacement that's actually happening. So some companies I talked to are taking operations where they have 15% automated today. They anticipate it's going to be 70% automated. They started that at Meta, and that's actually flowing everywhere else in the Valley at the moment.
How much Nvidia, how long have you owned Nvidia? Have you been buying more along the way, and what would you do based on tomorrow's earnings?
I have to go back and see, but we are buying along the way. I'm buying the dip. Okay. The price target there is about 180.
Okay. 126 is where it stands right now. Ray, thanks for coming in today. Really
Thanks a lot.
Ray, you don't really, I don't think anyone thinks China could be the next Japan. It's just not in anyone's calculus right now. There were more things that derailed Japan from global leadership than just population. Were there some differences? I mean, do you really think it's possible that we look back and China is not the huge threat we think of that we see right now? Is it?
From a capital market perspective, I do agree. I think that it's a different structure.
Right.
But because of the way the governance is set, if you look right now, the bond rally in China is they're betting on the fact the government's going to provide the bailout. But the challenge there is you have a generation of individuals that have never seen a bad market. You also have a bunch of factors around world trade.
But it would solve a lot of our problems, right, is what I'm saying, because we seem to be at some point...
We're escalating, yes.
Where we're going to have to deal with who gets to be the you know, I don't, you know, as an American, I figure we're ready to accept a couple of superpowers, but some... You know, I'm not sure China really wants another superpower around.
I actually think they
good
might
for
not
both.
make superpower status. Because if you look at economic growth, their economy is going to be contracting.
It is? See, that's what's not... I don't think that's in anyone's mind. We just think that the threat is going to just keep growing and growing.
There's the military threat. There's the political threat.
Everything.
But the economic threat,
too.
I'm not as worried about.
Okay.
It's almost like a Russia situation.
It's a Russia situation.
Post-USSR.
But because we don't think that right now. We think
we are in election season.
There's a collision coming at some point where and hopefully, I mean, there are people that think it could even get, you know, the military could actually get involved. Taiwan.
Well, that is true, right? So the economic situation could lead to a military situation to actually calm unrest. What do you do when the economy is bad? Well, dictators tend to invade another country to divert the conversation.